Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Big stocks to watch out in 2018. CNBC Tv18's Marketwallahs, SP Tulsian, Prakash Diwan, Ambareesh Baliga and Mehraboon Irani gathered yesterday to give their top bets for the new year. We have indicated some of the bets earlier today. Here's the third set of bets that came from our Marketwallahs.
Very low equity at about maybe 70 crore with a face value of 10 rupees, and market capitalization and or the EV is quite low, seen at about 7,600 crore as market cap and EV at 9,100 crore. And that translates into cement per ton capacity at about $110. But the best part is that company has already taken up the capacity expansion to 14 million ton, and that should get completed in maybe next 12 months or so. Maybe for FY19, I won't be surprised to see the EPS moving to about 78 to 82 rupees, which is likely to be at about 58 to 60 for FY18. So taking all this into consideration, share is likely to give a level of about 1370 in 2018, which is now ruling at sub 1100 rupees.
My sense is Jet has started doing a lot of things in terms of cutting down costs. The efficiencies would change dramatically. And if you have a KLM or an Air France or somebody bailing them out on the balance sheet, so apart from P&L, the balance sheet will also start getting repaired quite well. And if you notice, quietly there's been a reconstitution of the board itself. So from a lot of people who are just iconic names and generalists sitting on the board, they've actually got people with experience from aviation and similar sectors. And that's driving things very rapidly. So if Jet transforms itself, it'll get rewarded very, very easily. I wouldn't be surprised if it goes to that 1100 kind of a mark as well. So I know it's already moved quite well, but it will be volatile. It's not going to be a smooth ride, but it will reward if people patiently hold on to it, especially this year.
Mr. Sheshadri has joined in, who has years of experience with Citi, and he's expected to change the face of the bank. And now with the clear focus, again, back on SME and retail, I actually expect this bank to start doing well, possibly after a gap of either 3 or 4 quarters. There has been infusion of funds through rights. So I expect the bank to maintain those NIMs currently, and expect that to move up in FY19 and 20, because of which you'll have the EPS moving up. So I think the downside at these levels is very minimal. I think that's what one should look at whenever you're buying stocks at Sensex 34,000. So upside I'm looking at is about 160 in the next 9 to 12 months.
EDELWEISS is not the small player in the capital market segment which it was years ago. It has evolved itself. It's gone into lending business, started with wholesale lending, now into retail lending, where it is meeting with a lot of traction. Earnings could show an exponential growth over the next 2-3 years. It's difficult to quantify it. Current year should be a 10 rupees EPS, which should possibly become maybe even a 20 rupees in the next 2 years. I don't rule it out. So at 290 rupees, 100 becomes 290. Should I buy into it? The answer is, if it's going to become 450, why should I possibly bother of a 230, 240, 250 coming again? I would put it that way. It's very difficult to time stocks like EDELWEISS, which is showing exponential growth. So I will stick to it and recommend it as one of the best picks of mine for 2018 also.